Perhaps the biggest one, or the biggest mover of the net asset value at any rate, was our very early recognition of the digitalization of the China economy, the adoption of e-commerce. When we first started the emerging market strategy, e-commerce was only 6% of all retail sales in China, and it's now 30%. And throughout the period, really from about 2012 through to 2020, when it peaked after lockdown started, I guess, we made really very significant gains from a lot of our holdings there. I mean, the other one too that was a big mover for the fund was the move into India, which was actually before the public fund started in 2014. But from the moment we've had the public fund started in March 2015, we have had more than twice the market weighting in the Indian market, recognizing that Prime Minister Modi was making a very big impact on the economy there, was reforming a lot of things that needed to be done, and the market responded extremely strongly. And so we made very significant gains in India from 2014 through to really the end of last year, actually. It's been a very profitable place for us.
It's largely our focus on high quality, high growth businesses in the consumer and technology sectors. 80% of our outperformance over the years has come from stock selection, while the balance 20% has come from asset allocation.
We focus really very strongly on the consumer in emerging markets. It's pretty much comprises 85 to 90% of our portfolio. I mean, the reason we do that is because we've all had a lot of experience in emerging markets, and we just think that is the one thing that really is so reliably forecastable. And the accumulation of wealth is very significantly better than it is in the developed world. And all these people are coming from a much lower base, and they want better things in life. They want a more convenient, more comfortable life. And those are the themes that drive our investment process, really. I mean, that's what we do.
We look for what we describe as good businesses, and that is reflected in companies that generate a return on equity in excess of 15%. And there's a breadth of returns across the regions and across industries. But if you look at the emerging market universe, certainly less than 20% of companies have a ROE of less than 15%. So we think that is a good measure of businesses that are generating excess returns. And those excess returns, we hope, are then invested in the future expansion of the business. Cash return on assets of 15% and profit growth of 15% are the other two elements of that equation. But they have served us very well, and as investors and as analysts, we forecast our own metrics. So we're looking for the future growth prospects for those companies, and that's the bedrock of our analysis.
Well, we maintain a watch list of stocks, which is between 200 and 400, and we undertake over 150 visits a year, and we're constantly screened for new companies that might meet our criteria. Yeah, well, valuation's key, and we tend to use the PEG ratio, and anything that gets beyond 1.5, we re-examine the investment case, and quite often trim or potentially sell that position.
The growth opportunity will continue from general economic development, also from the prospects of income growth for many citizens within the wider GEM region. And in fact, we expect to see literally hundreds of millions of people moving into that middle income category. And at that point, they will spend more of their money on a diverse range of goods and services, providing opportunities for us as investors to identify companies that benefit from that.
It's an emerging market strategy that you can sleep at night with, because it is actually quite defensive. We have generated a huge amount of alpha over the index. I mean, you do not buy emerging market ETFs. It's one way of guaranteeing to have disappointing returns. You need to have good stock selection.
So if you're looking for a well-managed, well-diversified and successful GEM fund, clearly we would encourage individuals to consider our portfolio within a GEM and within a global context.